So today we're going to talk about Hims and Hers. After they just smashed their Q1 earnings, they were very impressive and the stock is up massive after those Q1 earnings. So we're going to talk about all the good things that were in there and all those people that were talking trash about Hims and Hers 2 years ago or 3 years ago now, saying Hims and Hers is uninvestable at $3. Once again, they're very quiet today, and I was here on the YouTube channel at $3 saying that, you know, it's a good opportunity, guys. So let's have a look at this stock because it is one of my biggest holdings. In fact, it's my second biggest holding in the stock market. So let's have a look at what's going on with this stock today. Hope you enjoyed the video. Congratulations to all you Hims and Hers shareholders. Let's get started. So the stock I own that's on fire is Hims and... Oh, well, this is not Hims and Hers, it's Mercado Libre, but this is up 150% since I started buying the stock. The stock on fire that I own is DraftKings. I do own, and that stock is on fire as well, my largest position, but it's not the one that we're talking about today. So we're going to talk about this, another stock that I own that's on absolute fire today. I didn't mean to talk about this one, but another stock that's doing absolutely amazing that I own as well. So what we're going to do is we're going to get onto the title of this, Meta Platforms. Another stock that I own is that's on fire, up 100% in the last year. That's not the one I wanted to talk about. The one I want to talk about is Darktrace, up 100% in the last year. Another stock that I own that's on fire, but not the one I wanted to talk about. The one I want to talk about is, there we go, Hims and Hers. This is the one that is on fire that I own. Hims and Hers, absolutely smashing it, and up 3% on the day of earnings. So maybe someone got a little bit of information there, but in pre-market, up 17%. Wow. Obviously, you guys that see this video, obviously it'll be open, so it might go up a little bit more, I might give something back, but I will take a 17% open in the pre-market, which would be absolutely nice to see. And from the days when I first started buying this stock in 2022, which is now getting towards over 2 years ago now. I mean, do you remember the days when the stock was $3 and I was making the videos on the whiteboard saying, I really like this stock at $3, and nobody wanted to talk about it positively. Everybody was saying it was uninvestable at $3, and now, I mean, the stock is up 231% from that time frame, and actually when the stock opens up today, it's actually going to be up even more than that. So it's done very well for us, has Hims and Hers. So yeah, actually really good to see. And it seems to have this pattern at the moment where it brings out earnings, it jumps up, has a little bit of a downtrend, brings out earnings, jumps up, and it looks like that trend's kind of continuing here. First of all, obviously, let's talk about some of the CEO and Andrew Dunham. Obviously, I covered this in a video the other day, so I'll spend a minute or two on it, and the tweets, and how he probably shouldn't be doing that much of political tweets when he is an active CEO. But what I will just put in here from when I last updated you is that he has come out and tried to give a little bit more clarity on some of these tweets. I think that probably, realistically, someone on the board kind of like dragged it to one side and said, you need to calm down here as the active CEO. And I think he's gone back from being very pro one-sided to kind of going, yeah, what I really mean to say is that I don't think war is a good situation here. And as a CEO, I think he's fine saying that, but I think it's when he starts taking one side in this situation is where it gets a little bit, I don't know if that's going a bit too far as an active CEO. So obviously the shares rebounded on that news that he kind of put this tweet out. So I think that's a good step in the right direction, and hopefully this is something he kind of maintains going forward. But the Hims and Hers earnings, they were absolutely fantastic. I mean, the EPS beat, you know, we really want to see the profitability ramping up. And they posted GAAP, not non-GAAP, GAAP EPS of 5 cents. This beat by 0.04. Really, really good beat. And realistically, I don't know what's going on with Seeking Alpha here. It says here that we're trading at 138 times forward earnings. Realistically, we're probably on the path towards 50 times forward earnings. Now, when you look at that 50 forward times earnings, and you talk about a company here that is just grown 45% year over year. I mean, I looked at Palantir's earnings last night, which I thought were actually okay, but I think they grew 20%. So Hims is growing double Palantir, and they trade at 70 times forward earnings. So if Hims is growing double, and it's also 20 times less on an earnings forward basis, I think we could still say Hims and Hers could have a cracking few years ahead of it. Second quarter, it raised its guidance once again. You can see here the consensus was 285, and on the high side, it was 297. So that's a major hike up in the revenue guidance. Adjusted EBITDA of 30 to 35 million, reflecting an EBITDA margin of 10% to 12%. We'll come back to that in a little bit. Revenue of 1.2 billion versus the consensus of 1.19 billion, and the adjusted EBITDA guidance here of 120 million to 135 million, reflecting an EBITDA margin of 10 to 11%. Now, what's actually quite impressive about this 4-year guidance is that some of you guys that have been Hims and Hers shareholders for a long time now, you'll actually notice this was supposed to be their 2025 guidance. This is what they said they would do in 2025. So this is way ahead of expectations. We are a year ahead of what we were expecting, which is also very impressive. Digging a little bit more into the details here, net income really good as well, 11 million, adjusted EBITDA as well of 32 million. Scroll down. Only thing to keep an eye on is monthly online revenue average subscriber, was a little bit flat, but net orders was up 20% and the average volume was up. Order volume was up another 21%, and the subscribers still grew 41%, which I should have highlighted, which is probably one of the main priorities with it. Online revenue was 45%. What was more impressive was wholesale revenue was up 58%. This has gone back to really good amounts of growth. And this is really important because obviously linking up with partners and also awareness, using, if you go into a Walgreens and you see, Hims and Hers there, it gives your brand a little bit more awareness as well. So that's really good to see the wholesale revenue still growing at good rates. Gross margin as well, that went from 80% to 82%, really good improvement. Net income last year was a loss of 10.1 million, now 11.1 million, so they are making positive net income. I think that we will see Hims and Hers, obviously we're going to have a profitable year, full profitable year this year, and then hopefully what we'll see is actually Hims and Hers come into the S&P 600, the small cap S&P 600, and that should give it a boost up if that was to happen. So that's something to look forward to at the end of the year. I think that will join the S&P 600, and that will obviously have all the institutions that will have to buy into that. So I think if they were to do this positive 4 quarters of net income, that's something really important that's being missed at the moment. So yeah, that'd be really good to see as well. If you look here, cash and equivalents went from 96 million to 105 million. So the balance sheet is just improving more and more, which is what we want to really see with the business. What was also really impressive was the cost management. You look at the marketing, a lot of people always had criticism around the marketing spend. If you actually run at the marketing spend from to the revenue, they are getting, as a percentage, marketing is coming down less of a revenue point of view. So the scale of economies are picking up now. People always said, it's loss making, but they didn't realise the reason why is they're capturing a lot of market share early on, and then the scale will lead them to profitability. I've called this out for basically 2 years on the YouTube channel now, and it's clear that once again we see the marketing, it's going up, but as a percentage of revenue it's coming down, and that scale of economy is really picking up. There was an increase, quite a big increase in the operations and support, but they are launching new products, so I can expect that to happen. Same with the technology and development, same with the G&A. But I thought the costs were quite controlled overall, so I'm fine with that overall. Stock-based compensation, there was a slight increase in the stock-based compensation, which is something worth to point out. Hopefully they keep managing that. It's not as, I was a bit critical of this, I think it was last year, but it seems to be going more into a better point of view of the stock-based compensation at the moment. But what I totally forgot is, I looked down here and I went, repurchase of common stocks, 28 million, and I was like, hold on, do Hims and Hers buy back shares? And I had to go back on the last quarter, and I totally forgot Hims and Hers were actually buying back shares. So yeah, 28 million buyback, and that means that I think they've still got nearly 20 million left on a buyback, which is really good, and obviously that stabilizes the stock-based compensation and more, which is good. Listen to the conference call. It seems like obviously they're going to have a lot of things they can do now because they're profitable. They've got a clean balance sheet. They did say that when this does expire in the next quarter, they'll reassess and then probably put more back into another stock-based buyback, which is really good to see as a shareholder to be this stage of the company. I mean, sometimes we forget, don't we, that Hims and Hers has only been a company since November 2017, and the fact that they are over a 2.5 billion company now, the fact they're profitable, they're still growing at these rates, they're buying back shares, you sometimes forget the progress that this company has made in that time frame. It is very impressive when you start looking at the numbers. And listening to the conference call, there was a lot of other positive things they talked about. They'll talk about new product launches, for example. But looking at the guidance, I was like, they're still really sandbagging the guidance. I mean, it's very impressive that the adjusted EBITDA went from 6 million up to 32 million. But if you look at the adjusted EBITDA margin, it's gone from 3% to 12% in a year. That's such an impressive expansion. But at the moment, they're doing 32 million and 12% margin. Now, if you just go back to the guidance for the full year, so for the full year, you can see here, the adjusted EBITDA margin is for 10 to 11%. Now, this margin is probably not going to get any worse from here. It's probably going to improve as the company keeps on scaling. And the fact it's already 12%, I mean, on the high side, it should be 12% already. So I think the lowest they're going to get is 12%. So the margin is already sandbagged on the adjusted EBITDA margin. And if you look here, 120 million to 135 million, you got to remember that they've just posted 32 million of adjusted EBITDA. Now, if we do a little bit of lazy maths and say that it doesn't improve anymore, which it will do, that's 128 million of adjusted EBITDA. So they're already, basically, if there's no improvement this year, they're already at the middle of the guidance. But as we know, as the year goes on, as the company keeps on growing, the adjusted EBITDA margin keeps improving, that adjusted EBITDA margin is going to be absolutely smashed. So there's still a lot of sandbagging going on in that full year guidance, and that means that through the rest of the year we're still going to be seeing a lot of hiccups in that guidance. So even though this was a fantastic quarter, once again, 10 out of 10 quarter, EPS B, revenue B, guidance raised, even though it was a 10 out of 10 quarter, there's still so much potential with this one. And the fact that it's, like I said, it's a bit annoying that Seeking Alpha has been a bit slow here, but it's actually probably around 50 forward times earnings. And for 50 forward times earnings, you're getting a company growing at 45% with this profitable growth, with these share buybacks that are going on. It's really exciting, guys. It's really exciting, and I always talked about Hims and Hers. Like, I always bought it because I think I would get 100% return from Hims and Hers, which I've achieved. I've achieved 100% return from Hims and Hers. But I bought Hims and Hers because I saw that 3x to 5x potential in it in the next few years, and I think it can get there. I still very looking at these numbers and how they're smashing it, and how big the TAM is here, and the potential of the new products coming in. I still think this has the 3x to 5x potential that I saw a few years ago, and I really hope they do deliver on it. And this kind of comes back to the first point of view, is that all I really need is Andrew Dunham to just make sure he focuses on the business. That's the main thing, because he has a potential gem here for him as a big shareholder of the business, and for us as the shareholders of the business. He could really deliver on this business right now, and the financials he could deliver in the next 3, 4, 5 years could be amazing, and that would lead to a really good improvement on the share price. I mean, a lot of us have already been rewarded in the last 2 years, but I mean the rewards that we could really get. The big, there's a big difference between having 100% return in your portfolio, and then you have a stock that 3x's, 4x's, 5x's in your portfolio. It can be a game changer. It's one of those that really helps your returns and helps you really outperform the S&P 500, is having one of these stocks. And I see it with him. I saw it 2 years ago, and everything that I see now, 2 years later, still says to me that this stock has so much potential. And it's exciting, and hopefully the focus goes on the financials, and they will execute, and we will continue to get rewarded. So as a shareholder, I was very happy with this report. Really, really happy. It was another really good report. So yeah, I'm a happy shareholder, and for any of you guys that are shareholders, congratulations, and I hope you're happy with the results as well. If you could, hit the like button, and I'll see you in a bit, guys.